The recent crashes experienced by cryptocurrency, specifically Bitcoin, have put investors in a precarious situation. Investors are stuck between selling their Bitcoin to prevent further losses or holding onto them through the upcoming crash. Join us in today's video as Michael Saylor weighs in on what this crash might mean for Bitcoin.
Well, I guess we'll start off with sort of the price falling again with Bitcoin this week. So what's your reaction to the current dip in the price and what it really means for Bitcoin mining companies?
I think that the crypto industry is going through growing pains, and over the long term, it'll be a good thing, but in the near term, it's a painful thing. There's about 90, what is the number, like 19,000? Let me pull this up. There are 19,839 cryptos on CoinMarketCap right now. And there's one Bitcoin. And that means there's 19,838 other things that are all thrown into the same bucket. So everyone in the marketplace and everyone in the mainstream media is trying to figure out what's the difference between Bitcoin and Ethereum, and what's the difference between Bitcoin and Celsius and Terra and Luna and DeFi, and what's a currency and what's a stable coin and what will happen to these things. And so at the micro level, a lot of learning and rationalization as the industry goes across the chasm from the entrepreneurial offshore Wild West roots to the onshore institutional public visage or public image that it's about to become. And it needs to evolve and change in order for the big banks and the big investors and the big institutions to become involved. And there's a lot of uncertainty as it changes. So I see the industry is going through a very critical transitional period. And then if we overlay on that, the macroeconomic environment, which is just brutally painful, right? I think today the NASDAQ is down 362 basis points right now, which is extreme red, right? There's extreme red across all asset classes. It's a big risk off day. Swap rates are leaping, and so that's a lot of stress that's being placed on the entire financial economic system. And in the midst of all that stress, a couple of breakdowns, the famous one being Terra, but the secondary one being the Celsius breakdown that took place in the last few hours. Those are causing a lot of skittishness and a lot of panickiness amongst people that are short-term traders, or they don't have conviction. If you're a Bitcoin hodler, right, then all of this is just volatility if you have a long time horizon. But if you have a short time horizon, or you're trying to divine things week by week, day by day, then clearly a lot of anxiety in the air, and all of those things are a perfect cocktail for volatility.
Well, you know, Bitcoin is really the phoenix that sort of rose out of the ashes of our last recession, our last financial crisis. So how do you think Bitcoin will perform in this one, especially versus traditional assets, stocks, real estate, precious metals, and commodities?
Well, if I look back to the first of the year 2020, and I compare Bitcoin's performance versus everything else, I think it's 10x better than most conventional assets. So I think it's already been doing very well in the past few years. I think it'll continue to do very well, and the primary driver is going to be education. As more and more people understand what it is, as they understand a digital monetary network, and they understand its status as a non-sovereign store of value, deflationary, synthetic bearer instrument, right? As they understand that, then it's going to gain more adherence, and it's going to continue to monetize. It'll do it in fits and starts.
Well, one would argue if you are educated in Bitcoin, you're not selling. So who are the sellers right now?
Traders, right? I've classified all the people in the market as 5 categories. You've got the deniers, the skeptics, the traders, the technocrats, and the maximalists. The deniers and the skeptics don't put money into the market; they just hate on it. The traders are the ones that are attracted by the volatility of the market, and clearly they're having a field day today. If I look at Binance, the spot volume in Binance is $6 billion, which is triple, quadruple any normal day. In fact, this is probably one of the biggest days of the year, if not the biggest day of the year. So if you are a trader, then you want something with a lot of volatility that trades 24/7, 365, and they're going to trade the momentum of it. The traders, they'll trade it with risk assets as long as it's correlated to risk. So today's a risk off day, and they'll think it's a risk off asset. And on risk on days, they'll trade it the opposite direction. At some point, the way they figure it out is not through thinking from fundamentals. Fundamentalists, the technocrats will look more at the fundamentals, and the maximalists will look the most. I can almost think, if you spend 20, 30, 40 hours, maybe you can be a technocrat investor. And if you spend hundreds of hours, you'll become a maximalist investor. But if you're a trader, they're not going to spend more than a few hours. What they'll do is they'll run back-tested statistical models. And they'll say, well, we back-tested Bitcoin versus the NASDAQ index, and we determined that it trades with 3 times the volatility or 2 times, the amplitude, and then they'll adjust their models accordingly, and they'll look to arbitrage that. The traders have all the money in the market right now because the maximalists are all fully invested. They're dollar cost averaging. The technocrats will become more prominent, but right now the technocrats are investors, and all the tech investors are bearish. They're all afraid of everything, right? If Apple, Amazon, Facebook, Google are all trading down, the technocrats are in a bad mood and they're feeling a bit skittish. So the people in the market right now are the traders. They're always going to have more money and less fundamental conviction. But the traders, what they do is they provide liquidity. They'll expand the amount of asset in the marketplace. And then at some point, some fundamental investor, like, some big technical investor will go and buy $5 or $10 billion worth of Bitcoin and declare it to be a big tech monetary network. That will move the chart. That will break all the models. It'll modify the models of all the traders. The traders will then go, oops, it looks like it's negatively correlated to this, or it's correlated differently, and then they will unwind their trades, or they'll cover their short positions, and that'll cause a squeeze up. So when you're a young investor, you hate the people that short your stock. When I was an early CEO, I used to hate the short sellers. But then I began to realize that people that sell your stock short are going to buy your stock. They've just got it in reverse order. So people that short Bitcoin will eventually buy back Bitcoin to cover the short. They've got it in reverse order. The danger is not the traders. The danger is having an asset that is of no consequence to anyone, right? That is not interesting. So the market's being driven by the traders right now. It's the most exciting market in the world. It's the only thing you can talk about on Saturday afternoon. It's the only thing you can trade on Saturday afternoon. And in times of risk off, when everybody's bearish, and everybody's kind of bearish right now because of Fed policy and inflation and fears about the future. When they're bearish, they'll act bearishly on the weekend, and they'll amplify that. But when that sentiment changes, then it'll work for us in the opposite direction. And even if it doesn't, I think it's just a matter of time before more of the fundamental investors come into the space, right? The life cycle is going to be, the deniers will become skeptics, the skeptics will become traders, the traders will become technocrats, and the technocrats will migrate to maximalist, in the same way that water flows downhill. In the same way that people were originally skeptical of using steel and aluminum and electricity, but 20 years later, many of the skeptics had, buildings made of steel with electricity in them, and they were flying in airplanes with aluminum in it. So their progress can be counted on. The only real question is, over what time frame? Is it 10 years, 5 years, or 20 years that it takes? And that's where, if you're a trader, right, the traders kind of want to get it right. If you're a maximalist and your time frame is 20 years, then it doesn't matter to you, right? You already know the answer. If you're an investor with a time horizon of 4 years, well, maybe then you're going to wait on the sidelines until you think that you're within 4 years of hitting your goal. If you're a trader, their time horizon is 4 weeks or 4 days. And so they're always going to be concerned about taking a big commitment no matter what.
What did you guys think about Michael Saylor's perspective? Would you instead hold on to your Bitcoin or sell them off? Comment your thoughts in the comment section down below. If you enjoyed this video, please like and subscribe, and we'll see you in the next one.